Hello and welcome to our weekly market alert video, and this is for the week ended January 14th. So half the month is over already. Gee, it was New Year's Eve a day ago, it seems like. One of the things that we said to you would be going on this month would be a lot of volatility, and sure enough, that's what we're seeing, a lot of volatility. We're putting it in the category of indigestion. We think that investors are having a hard time getting their arms around the Federal Reserve and what it's doing and whether it's going to cause issues or whether it's a good idea, if they are overstepping, understepping, all that kind of stuff. And so this digestion of what the Fed is doing now is slowly taking its place. It's taking its effect. And as people on one day are in a good mood and the next day they're not, based on the news that's coming out, we see the markets, the S&P, the Dow going up and down. Interestingly, this week we had Monday and Tuesday were big up days, and then we saw Wednesday be a flat day, and then Thursday and Friday were down days. So that's just another illustration of this indigestion that we see happening. As you guys know, we always look at corporate profits to help us to diagnose which way we think that the markets will go. And we're going into profit season or earnings season just now. So we're going to have a lot of companies reporting their earnings very soon for the last quarter. And we believe that it should generally be a good picture from that standpoint. One of the concerns on Friday, as I record this video, is that retail sales in December missed the mark. Well, big reason for that is that the consumer was concerned about the supply chain issues and had already started their shopping in October. So there was a lot of shopping for the Christmas season being done in October and November. So when December came around, there was very little. So people were anticipating shortages, buying in advance. And if you look at the numbers, according to the Department of Commerce, for the shopping season, the total picture, it was the best shopping season ever. Consumers spent money, $200+ billion. And that's because they have money in their pockets and there's a lot of money on the sidelines still. So what's the big picture? Our fearless forecast of Dow 40,000, that's a big number to say, 40,000 is still on the table. We still think we're going to get there. But as we've said, it's going to be a very bumpy ride along the way. Why should we get there? Again, the virus, the Omicron, seems to not be creating the number of deaths and should start to fade, and that'll be a good thing. Also, we think that profits, as we said, should be good, and the supply chain issues should abate. And most of the inflation that we see, we think, are generated by the pandemic and the supply chain issues. As those things resolve themselves, we think inflation will come down, and that'll also help in terms of profitability for companies. So the picture is muddled. It's hard to digest it all right now, but overall, we think we're moving in the right direction, and we should see new highs later on this year. However, having said all of that, as you know, what we know and what the market knows could be quite different. And so we always have to prepare for the worst. And so we have our invest and protect strategy in place to help protect us and mitigate the downside to the best we can should a big bad bear market come. What could cause that? Right now, there are three things that we see that have that potential. One is China invading Taiwan. The other is Russia invading Ukraine and we go to war. Or maybe both of those happen at the same time, where China and Russia say, let's do it together and see, and let's take on the United States all at once, and they can't handle the truth. The other thing also is the potential for stagflation. Stagflation is when you have inflation at the same time that you have a slowing economy. And that's certainly a possibility this year. The Federal Reserve raising interest rates at a time when the economy starts to slow down and you have stagflation, and that is a mess. That's a bad, bad thing, and that could cause a bear market. So those are the things that we give a low probability to, but could happen. All the more reasons why having a strategy to address bad times is a good idea. And as a client of ours, we think we have that plan for you. So we hope you have peace of mind. We hope that all is well with you and that you are enjoying your second childhood without parental supervision. So thank you for watching this video, and we'll talk soon.